Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, April 28th, 2024. Hope you guys are having a fantastic weekend, and let's get started. So, on Friday, we kind of had a nonstop bid under this market, and in the morning notes, I said, if the bulls can get it above this, the right around that 50, 90, 50, 87 area, don't fight them because they're going to go up and they have something up their sleeve. And I've been, there's some kind of rumors about Yellen doing something tomorrow. I'm not really quite sure, but for whatever reason, it really was not worth trying to fight the bulls. You're gonna get hurt on that. So we pretty much went up and then just went sideways. We were able to take a pretty easy condor trade once we got up here and we started going sideways. And again, we put our stop in, so it was a zero risk on it, and we ended up making 2,100 on it, and it was really never even came close to coming near our stop. So the entry was the good part, because once we got up here and we started just going sideways, that's when you want to put on the condor trades. When you're going up and we're getting these types of moves, that's when you want to move towards a debit trade, because you're just going to get stopped out of the condor. So that's what we did. It worked out great. It was a very relaxing day on Friday, and the bulls melted up. And right now we're in this resistance zone right here, and this used to be support. So once it was support, it now goes to resistance, and really the resistance goes right there. And what you're looking at here, these little boxes, is basically the time and the distance. So from here to here, this was the time period. I just copied and pasted it. So you can see that if it's going to make an ABC move, which I think it might, we can see the S&P coming somewhere up into this 5137. Now, if that gets taken out, then we're going to start looking at some of these gaps getting closed. But if the bears can hold it right in this area, then basically all this is an ABC move, and from there we should start it back to the downside. So, you got to just stay open-minded with it. You're not sure what they're going to do, but as far as a pattern-wise, this is what I'd be looking at. It's just an ABC. With the bulls are going to run out of steam here, and from there we head down. Now, again, if they start getting above it, then you just start looking at the other resistance zones. So we have the 5164, and then we have this gap at the 5197. Now, can they get up there? Absolutely. They're not going to be too far from the all-time highs, but in any case, if the bulls can get above this, then these are the levels that we're looking at. And I'm still on the side that the highs are in place already, but again, it's subject to change. We all have to see what happens, during the week. If they start taking out the resistance zones, then we just switch back to the bullish side. But we should be, right now, as far as time period, we're in a bearish time frame. So I'm expecting one of these areas to hold it down, and then we start continuing it to the downside into. Really, it's going to be the bears still have time on their hands. So if they do follow this and they head down, I believe we're going to be making it down to that 4,700 level. So right now you can see we kind of have a little bit of a bearish divergence, not much, and the sideways action allowed for momentum to get into the neutral area. So if the bulls want to try higher, they do have some gas in the tank on the short-term charts. And if the bears want to come down and test these support levels, really the first one they're going to have to get through is the 5090. If they do that, you can see the 5082 is the 50-day moving average, and then we're going down to the right around that 5065 level, which is also support. So that's what the bears need to get through. I've already mentioned on the upside, if the bulls can get it above this 5137, then we're looking at a move coming up to the 5170 level. On the 60-minute chart, here you can see we're pretty overbought right now. We do have bearish divergences, possibly. If they start going sideways to down, then yes, these are going to be bearish divergences. And again, it was just set up the time for, the next move to the downside. Here's the trend line I've been watching. You can see it's pretty much right where the high went. So again, if the bulls can push through it, then this is going to be eliminated, and we just start looking at the other resistance levels and see how the bulls and bears react up there. So basically, we do have some sell signals on the 60-minute charts. We're pretty overbought, and we're in the resistance area. So it's really up to the bears right now. If they're going to try to push it lower, they're going to have to do it quickly on Monday. This is going to be the important support level, the 50.62. If they take that out, you can see there's really no support on the 60-minute chart until we get down to that 49.84 level. So it's, to me, the best pattern is an ABC move. If, again, if the bulls take over, then we're looking at a move coming somewhere up into that 51.37. If the bears come down, the first first support they're going to have to get through, 50.83. But more importantly, it's going to be this 50.60 level. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.